Hello everybody, this is Bulldozer Investing. Today is March 24th. It is 4:48 p.m. US Eastern Time. Before we began our analysis, I did give a little bit of a break due to my basement construction that I was doing my own remodeling, and then my night classes that I teach, cybersecurity classes at night, kept me a little busy. So I wanted to take in this break a little bit to make sure that everybody is updated on the market. And so let's begin our analysis. First, we're going to start with VIX. A lot of people, it's like the last couple of weeks, the market really doesn't make sense to me at all, technically speaking. Because if you look at the market, VIX is like, at its lows, and it's not even like doing some huge spikes. But then at the same time, market is like down a lot, especially the growth names, right? So we're gonna have to go ahead and analyze what's going on, what it could be, why is it doing it. I think the VIX is staying down due to the chop in the market, actually daily chops. Like you see SPY going up or the market going up, and then it goes down and it tries to recover. So VIX is like, you know, going up and down, but it's not having its huge moves. However, I do see this rounding bottom, which I always, show you guys. So you see this rounding bottom right here. Let's take an image here. So the rounding bottom here, as soon as it takes off from here, it's probably going to test either the 100% fib level here, or you have the 50 and the 20 moving averages here, or the cloud top or the cloud bottom, and then see what it's going to do after that. But it's unbelievable that how VIX has been down. It's containing this level of 19s and 20s, but it's like the market is not moving either. So it's the daily chopping moves, and these bars are actually pretty big. So it tells us that there's daily volatility. Look at this daily volatility. Candles are huge. Here you don't have that daily volatility, right? So and the fact that VIX finished with a hammer on the daily is very interesting. I've told you guys many times that even though a lot of people have messaged me, oh, you're the best, you know a lot. I kept telling you guys, and you guys thought that I was being humble. Nobody knows the market. Nobody knows what's gonna happen next. As I've told you, you're gonna say, then why are you doing these videos? I've told you that technicals will only work if the previous patterns repeat. So if the history repeats itself, then the technicals will work. That's all I gotta say. And then all these computer programs that buy and sell, high frequency trading programs, the algorithms are based on these technicals. So you're basically just trying to guess what the machines will do if the program is triggered. Okay. However, we're in a political the I mean, I don't want to get into politics, but you know, when Biden took office, the stock market ran huge, and I kept saying this. I don't know if I recall, like months ago, but maybe I wasn't recording them. But I kept telling my friends, if a new president is elected and the market runs, you're gonna run till the inauguration. But as soon as the inauguration happens, market is gonna collapse, and that's what happens. Now, the fixing of this market is going to be, I have a lot of questions in my head, because as soon as Biden came into power, the first thing he did was a military action bombing Syria. Then all of a sudden, coincidentally, or we'll say randomly, a Syrian guy, um, which was accused of being a white supremacist at first, because a lot of Syrians actually don't look like Arabs. They look white, Caucasian. So a Syrian guy comes up randomly and unfortunately kills people. So it's like, okay, are we trying to start some Arab Spring, Middle East, you know war again? Back, are we going back to Obama's era, time, where we basically just, I don't want to talk about it, but millions of people died, rather it was right or wrong. during Hillary Clinton's and Obama's era. We basically went through all the North African countries and all the Middle Eastern countries and basically went to full blown out war, either using our military or we saw some uprising, and I'm sure those uprisings didn't just happen all of a sudden. So are we stepping into a war in Middle East with the Biden administration? Which I believe another question that the market is probably trying to guess is that after he stumbled on the stairs, how long can, I mean, I mean, he can, live a long life, but it's that how long can he be fit to rule in office? And we might have a coup, all of us. You might think I'm crazy or anything, but when your money is in the market, you have to think of these scenarios too. Um, there could be a possible coup that, even if he is fit, you could have, all of a sudden people coming out and saying he's having a dementia, which he has had in the past, and he's not fit, and just like put him into a hospital and have Kamala rule. Um, so that, all these things are possibilities, and I think we're in a time of um, questions. It's like, do you want to keep your money in the market where there could be a possibility of, Arab Spring version 2 in Biden's administration? Do we know if Biden has control in the office? Now they try to propose that he does today with, him assigning Kamala to take care of the border issues, which Trump had already tried that, but he was criticized with his wall and everything. Maybe he didn't have the intention, but I mean, regardless, is Democrat or Republic, I'm neither. You can see that there is no difference in either one of the administrations, honestly. Um, so what I'd like to say is that with the current government, there's lots of questions of what's going to happen next. And I could already guess from a mile away that Middle East is going to have some hard time with this administration just from day one. Um, and yeah, Trump did, do Middle East strategies as well with his team, but it wasn't like a full blown out war. It was more critical and um, like targeted missions, targeted, personalities rather than throwing bomb over people. So not a lot of death casualties. Maybe the media didn't portray his Middle East politics and success. But either way, so market is going to be very unstable and it's going to be very volatile and choppy for the next couple of months. Options are going to have some lot of premium eating. Rather you have puts or calls. I wouldn't play any options in this time because it could be that market will just you'll buy puts overnight and then you wake up, market is up 2% and you're destroyed, so you got to take the loss. Or it's like you're just going to wait on the loss and then all of a sudden the market drops back, but then you don't make anything, and by the time your expiration comes the premiums are basically done and you're just blown out. Maybe selling covered calls might be the best strategy at this point. So VIX, summarizing VIX, I think we see a beautiful, actually here, rounding bottom, rounding bottom. I think VIX can easily head up to 27 in next couple of weeks. I would say next week or so. Huge, again, a huge resistance at 23.28 though, and I don't see VIX as, it should have moved a lot higher. That's what I'd like to say. Next up is SPY. So let's quickly analyze SPY. The chart looks bullish as heck, and the thing is, a lot of people just don't like this whole, like, if you look at it, if you zoom out, this is good. Like, there's no technical damage. Well, we were about to get a damage, but it was saved, and then like now we're at the bottom of the channel again, and I wouldn't be surprised if we go up to like 400. But the issue is this: even if it goes to 400, how much of our individual stocks are going to increase? It's like from here to here, we lost a lot of money, then we recovered, we were all happy, then we lost it again. It's like we're not feeling anything in the market. Or even if the ETFs move up, our individual stocks, you're going to say, well, you're not balanced. Well, look at this screen. What if you were balanced? What the hell? I mean, I mean, excuse my language, but if you were, and these are quality stocks. Don't BS me of like, oh, you have growth stocks on your list. What is Walmart, Disney, you know, What is Apple, Microsoft, Amazon, Google, Facebook? Facebook, you could still count it as growth, but like, you got IBM basically just staying solid, Home Depot staying solid, but the house, I guess the house sales went down. I don't know what Home Depot still is trying to survive, maybe because of their dividend or something. You got your energy stocks. Again, the tension in Middle East is going to help the energy stocks to go up. And we were told that this administration was going to help clean energy. What's happening? The exact opposite. Clean energy stocks went down the hill, and all the non-clean sector, the petroleum oil sector went up huge. So it's like, okay, what's going on? The first 100 days is not even, are we in first 100 days? I don't know. But everything that we were told so far, it's like opposite is happening. Tesla went from 900 to 6 something. Like all the clean energy stocks are destroyed. Now it has nothing to do with the administration, but what I'm trying to tell you is that the stock market doesn't care who is in charge. They played the market 6 months ahead of us. So 6 months ahead of us, if there is some military action in Syria, I wouldn't be surprised because that's what I'm seeing right now. If I'm looking at the market, all the healthcare sectors went down, and don't BS me with like, oh, you have like, small sector. No, I mean Moderna and Vax, these are okay, like, vaccination plays, but you got your BMY, Bristol and Myers, Gilead. They're not down that much, but like, all the Kathy Wood's ARC-G stocks are tremendously down. So CRISPR and Edit and PACP, Alteryx, again, Teladoc is down huge. NNDM is not a health sector, but AMG, AMGN, Amgen, Alexion, AbbVie, these are all health sector. Maybe I should move NNDM somewhere down because it doesn't really belong here. Anyhow, so you get the idea that even if you had a well-diverse portfolio, you're still going to be down today at least by 3%. If you had leverage with option, you're going to be down like 10, 15%. So the stocks, individual stocks and ETFs, at one point, actually the whole day, SPY was up the whole time. And you can see that what's challenging SPY currently is the 9-day moving average. Every time we climb up there, it's a rejection. Now, what's trying to hold is the 61.8, which couldn't at the end of the day. So what I'm guessing is tomorrow we might hit the lows of 385.96 or 386, give or take. And maybe down as the 50% extension where 384 is sitting. Now, is this totally normal? Yeah. I mean, we recovered from 372 to 398 in a week. So what are you expecting? I just don't understand. You can easily, I mean, I can draw a couple things here and there, but it's not about drawing. I just wanted to have people look at the market in a different way, and also look at the current news and what's going on politically. Germany is going down. They're closing Easter, the 5 days, so their economy is going to get hit hard. Europe is going nowhere. So all these things are happening. Turkey with their central bank, head of central bank getting changed like diapers every 2 seconds. All these things are happening in the world all around. The China tension, NIO got screwed. So everybody thought that, Biden was going to be more relaxed with China, but that's not the point. It wasn't the point. It's actually going totally opposite right now. I don't know if they're faking it or if it's for real, but that affected all the Asian stocks, including C. I'm not sure if C is not Chinese, but still got hit hard. Alibaba has been getting hit hard, so it really doesn't matter. It's like at a low point right now. But I think rather than charts at this point, I like to look at things globally. Yeah, the charts play out exactly. I mean, look what I draw. I said this is about a possible double bottom in the cloud. It was a nice candle here. When we were here, we hit the 100%. This wasn't drawn when we were here. This extension was drawn when we were here at the lows. And you can watch the video. Now, what I'm guessing is we're going to hit 386 tomorrow, and then possibly, what is today? Wednesday? Yeah. So Thursday, by Friday, we might go back and retest 9-day moving average again. But overall, I don't think the markets are bearish at all. It's just that the stocks that we're in, which are highly growth stocks, tech stocks, QQQ most likely, is just getting hit much harder. Let's take a look at the weekly, right? So the weekly, do you see any technical damage yet? The technical damage can happen afterwards, but it's like, currently. No, we've been zigzagging. We've been around this 370 between 396 range for a couple candles on the weekly, 1, 2, 3, 4. So for a month, we've been around this price range. Now, rather, this is going to go down all the way down to 350s. And a lot of critiques there that we might even hit the 100-day moving average around 320s. I don't know if that's going to happen all of a sudden, but I could tell you this market drops a lot faster than it goes up. So it can take 3 months to go up 20 points, and it could take 3 days to go down 20 points. So it goes a lot harder than down. It goes a lot faster going down than going up. So what I do think is we might be flagging for 411. So my target is 411. It has not changed, but the issue is it might not affect you because SPY is acting. The ETFs are acting completely different, and then the magnitude of SPY moving up or down 1% is like times 10 with the growth stocks. So that's my analysis that yeah, there's no technical damage. SPY can go as low as 386 tomorrow, including tomorrow. But my ultimate target is going to be 411. Now let's go ahead and take a look at QQQ. Again, it's like everything is playing technically correct. We went up from the lows, hit the 61.8, came back down, got a support at 100-day. Now we might go down again and get a support at 100-day. I'd say the resistance is going to be 318.39 and 323 levels. Are we doing an inverse? So I can zoom in. There's a lot of questions here that I'll go ahead and take a picture of it. Again, we don't know anything yet. We just have to analyze and see what's going on. Are we playing the inverse head and shoulder, or are we just doing, let's go ahead and delete this, or are we doing a little, and this is also bullish. It's not a bear flag, by the way. This could be because we get the higher lows. And well, anytime we break down, we're going to get a support right here. Are we going to break out finally the 61.8, which is 323.26? That's my question. Now, how could you be bearish? What is a bearish scenario here? The bearish scenario would be that if we lose 310, we're going to drop down to 302 and retest 294. There is no news yet. A lot of people think there's no news for the market to go down. But as I've told you, right, what was the scenario? Biden bombing Syria as his first action, and it happened all of a sudden. And then we get all of a sudden a Syrian refugee that sought asylum here, and then nowhere in the country, like it's not even like a crowded city, and he goes out in a range and shoots, unfortunately, 12 American people, and they die, and the guy happens to be Syrian, out of all. And we've had like war with Syria for the whole entire like 3-4 years, and nothing like this had happened. So it started with this new administration. Again, not a conspiracy theory, but not natural as well. So some things in life have naturality, right? We have the seasons. It's natural to have a cold weather in the winter time, and it's natural to have a sunny, hot day in the summertime. Things go in natural order. Now we're, human beings, we're, polluting the air and everything that, global warming and everything that just don't account that. I'm just saying the naturality of a leaf dropping from a tree, the thing is, it's unnatural for you to calculate where that leaf is going to end up because of its air dynamics, right? Leaf can just fall anywhere. It's just going to swing around. So everything has naturality, and this is not natural. It doesn't happen like this, So we'll see what's gonna happen. But what I'm guessing is that QQQ might get hit in the long run, but Dow, in the other hand, so let's go to Dow, um, is gonna win because you have your industrials, you got your Northrop Grumman, Lockheed Martin, all these like big players getting ready for the global tensions. I think that's what I'm thinking, and it's gonna and out of all, I like Dow's charts the best, and I was kind of right on when I said that I was kind of off because I thought that this would be where Dow would get stuck, and then I thought that we'd get a 20-day. And you can see Dow is also having a hard time breaking the 90 moving average and is curling down. So I think Dow is going to head down to 320s and maybe 315s again. But this is the thing. Out of all this trouble, out of all the chaos that I'm expecting to happen within the year or so, Dow is going to benefit the most. One, the reopening and everything, but then the other part of it is that um, we're going to have some global players going head to head. So even if you want to play instead of Dow, you can also play um, what is it? What is it? Defend. It's an ETF. I think it's a leverage ETF. But this is where you have all your um, big players that I've just talked about: Northrop, Lockheed, Boeing, um, and it has lots of gaps to fill. I see that 38 would be the resistance, but Raytheon and all these like General Dynamics and all these companies are in here. Mostly this went down because of aviation, um, but then again, if any kind of war starts, which I'm not in favor of, but if it does, this is gonna go out of the roof. So there's always opportunities in the stock market. It's just that sometimes we don't see it. Sometimes it just happens right in front of our eyes and we just don't take action. Now, I have Palantir, I have other stocks that I'm hurt with. It's like, do I have the guts to go ahead and, sell them at a loss and then buy, defend, and wait for a year? Again, that's like, another question that you might ask yourself. Now, this is the weekly chart, of course. I just zoomed out to see the chart better. But as you can see, with Boeing and all the other sectors, Dow, it's moving with Dow, the same exact chart almost, and it dropped. I think it's going to get up to 17.99. But that wasn't Defend is not one of my charts that I was going to cover. But you get the idea that Dow would be a better opportunity than Nasdaq or SPY in the longer run. And after it retests 323, 322s and 315s, Dow is going to go higher. There's no doubt about that. Next up is IWM, and IWM is getting hurt a lot too because of all the growth stocks getting chopped in a bloodbath. I wouldn't have, honestly, I thought that, Russell looked really bullish. I wouldn't have thought that we're going to go down this hard on Russell. Honestly, it's almost approaching 208 level again. And what a massacre. I mean, it's just ridiculous the amount of, energy and effort it went up. But again, low volume and a higher volume sell. So I honestly, like, I don't want to scare people, but honestly, I think a lot of people are like institutions are taking money out. And Russell can go all the way down to 202. Now, what will happen, and it wouldn't surprise me, is that if Russell starts recovering and it could go up to 228, but again, I showed AMD's chart on Twitter the other day. Let's take a picture. I don't like what I'm seeing as a rounding top. If it goes like this, now that wouldn't look good. So what would you do in this scenario? I would say get out of your margin first, raise cash. I wouldn't sell at a loss. I don't do that. I don't day trade. I'm a long-term holder. So anytime I do sell is when when I do make profit. Now a lot of people are going to say, I'll sell. They'll have rules. Whatever rule works for you is the correct way of trading, in all honesty. But um, if your stock goes down in this environment, give me a stock that you'd rather invest in. What are you going to sell, Apple and buy Microsoft? I mean, they're moving the same. They're getting liquidated. And what probably Kathy and other people are doing is selling their, bigger mega cap stocks and trying to average down their small cap and growth names. So it's like you can't get out of this. You either get out completely, and I've never seen, people who play stock market get out completely from anything. And don't, I'm telling you, don't follow those gurus that, say, oh, I'm completely cash. Bullshit. They never tell, their loss. I mean, honestly, I got destroyed. I'll tell you that. I got destroyed. But if you look at the ETFs, ETFs aren't destroyed. It's like it's like, I don't know what to say. It's, ETFs are totally fine. If you look at 3 months, it's just 0%. But if you look at your stock, you're probably down like 50%. So I don't know what to say at this point rather than, trying to find something new to invest because you're still going to get massacred and psychologically you're just going to be dead. Like you're going to be tired. So instead of trying to find something new, you either get out completely and raise cash and start from again, or get out if you do have margin or leverage, just take those leverages out, raise some cash and try to put it in slowly and start doing dollar cost averaging till wherever it goes, because we've seen that Bush era from 2001 to 2003, if I'm correct, the market didn't move, it was just sideways. So you might be in a journey of 3 years of nothing. But then again, stock market, I keep telling people, it's not something you play and pay bills. A lot of people treat stock market like casino. Stock market is where you invest and invest for a long time. Okay. Next up is going to be Apple. Now, I just said like you invest for a long time, right? If you play around with Apple for the past 5 years or the past 5 months, you'd be exhausted because you're like, you've seen the ups, you've seen the downs, and you're nowhere. Now, instead of putting your whole underwear in the market, you can do monthly, just, just like 401k, right? That's why 401ks always work, is because um, you just, put in money slowly, and regardless, you're going to wait for 20 years, and after you retire, you get a whole chunk of money. But you can outperform any 401k by just playing, solid names. Like if you were to play Apple, Microsoft, I don't know if Google was 20 years, but for the past 20 years, like Apple, Microsoft, I don't know, other companies that have been there for 20 years, you probably outperform your 401k, the managed ones. I mean, if you're doing your own 401k, I don't know. But the buy and sell here, look at this, you probably at a loss if you bought in here at the reverse split at, on September. So what I'm trying to tell you is that right now, put your emotions out of the way, stop watching the market daily, take out your leverages, and I've been telling you that I don't expect anything out of Apple for the next couple of months till summer, and my summer target was 180. So this range right here. So did I change my target? Kinda, yeah. I'd probably go lower around 144 now because I I was looking at Apple only alone, but then again, now I have to consider the whole entire market and the situation we're in. Um, God forbid if Biden is hospitalized and we get like, the vice president in office. Um, Democrats didn't even approve of her. She was just placed there. So I don't know how the market would react to it. Do I think Apple has a technical damage? No, because the band of 61.8 and 50, this band right here, is pretty much the trading range right here if you take the average. I thought Apple was bullish, so I posted bullish things on Apple because it kind of broke out. As soon as it broke out the 100, I thought it was going to continue. I was wrong. But were we right about the lows? Were we right when everybody was calling Apple, oh, it's going to explode everything? And I said, hold on, I don't trust Apple here. Don't buy. I wait for lowers like 125s, 120s. And we're here. I guessed that right. And I'm guessing the long term around like, any range from 144 to 167 is going to be my summer target. But we just have to sit and wait with all this political attention. Next up is FUBO. Now, FUBO is eating my patience away. I literally got destroyed in FUBO. Well, I'm gonna have to hold it, average it down, and when you start, when you invest in these names, if you put all your money into it, you can't average down. So, and this is, I keep telling this to people. I have hard time managing positions as well. No matter how much you tell people, it's easy to tell people, but it's hard to control your own feelings. So when you go in a stock, you're like, okay, let me put, a couple of grand, 1 or 2 thousand. I'll start slowly, and then you can't help yourself, and you just start putting more. So that you have to control. Critical level for FUBO is the lows of, 2 weeks ago, which is about 26, 26.16, 26.14. So it has to hold that level. If it doesn't, it could drop all the way to 18 bucks, which I would be really upset about. But in order for FUBO to really get a bullish run would be the 20-day moving average, which is around $32, and that's nearly coinciding with the 61.8 extension, which is $33. It got there. I was happy. It was going all good, and then bam. But is it just FUBO? Is it the stock itself? No. It's the same chart as Russell and all the other, QQQ. It's pretty much the same thing. So I wouldn't judge all these stocks just by itself. I would just look at the story. What did FUBO do to drop from 52 to 29, and what did FUBO do to go from $14 to $65? I think the natural stop for this chart or this stock would be, these lows. As long as it maintains it, and you see how fast it went up, right? Well, of course, the market in general went up with the same time with all the growth names, but um, we just have to sit and watch. I think that, and this is no more valid, so I'm going to have to change this, and we're going to have to put it something like this. Oh. So this would be the newer looking chart. Okay. So if this line of defense doesn't hold, then you're looking at $23, which was the low here, and then $18. Now again, I'm in the stock, but I have to tell you what I see. When the stock was here at 46, I said it could go all the way down to 38, and it did. Went lower, came back up. This was the earnings day, and then went absolutely down the hill. So according to this chart, in the near future, it could go and see 34, but it could also go see 23 and 18. Only thing I have to say is that this is not FUBO related. It's just where the market is heading to. There's nothing I can say. If the market is going to crash, FUBO can return all the way down to wherever it was when the market crashed on last year's, coronavirus crash. It's all about the market at this point, not stock related. So we just have to sit down and wait. And it's all your decision at this point to say, okay, I'm gonna sell half of my position and just wait. If it drops more, I'll buy it with that, or I'm just gonna keep on selling covered calls. I don't know. But it feels like there's nothing in our power that we could do to control the market, and it was all a big lie about, you know, well, it was all a lie about Wall Street. So, them controlling the market, it's a big joke. How much power do they have? How much money do they have? Do people even know how much is invested in SPY daily buying and selling? People, we were fed this news about, you know, people with their stimulus check controlling the market. What the hell happened? We just got our stimulus check and it was a much bigger check. So did it do anything to the market? No. So don't believe into these things, because when these news were pumping out, that's when they were selling it to you. And that's when you were thinking you were winning. Now you're seeing the picture of saying, "Oh, I was losing the whole time. I just didn't know." Okay? I thought I was winning, but they're just, pumping it to me, selling it to me. Now I'm stuck. Now that's what happens. That's what big companies do. So just wanted to tell you that don't follow the media, and don't just jump into something because everything is going up. Control your money with small increments and don't fully invest in something in one name. Or even if you do have a portfolio, don't put your entire money into the whole portfolio. All right, next up is Palantir. Let's take a look. This is the stock that I have most of my position, I would say. Chart is broken. Again, it could go, and when I say this, I'm sorry, but I gotta be, honest in all my, because I'm just saying what I'm seeing. And what I'm seeing here, it just doesn't look good. It just doesn't look good. I could say that our defensive line it's gonna be, I'm sorry about, it's gonna be about $21 and then maybe $20. And let's see if it holds again. If it doesn't, then the chart is completely broken. What am I gonna do to, maybe take out some of my leverage position in it, or maybe just add cash on it? We'll see what happens. But again, I'm not so happy with, the stock went up from 2050 to 27, and then bam, they took it down. And the chart in this channel, it doesn't look good. So you're gonna tell me, why don't you sell it? Well, again, I don't go in a stock for 2 weeks, 3 weeks, a month. I go in for a longer term. Now, it's my decision. I mean, if it hits 16, could it hit? Technically, it could. Now, when I say technically it could, you could just simply draw an extension here, right? So from this high or this low to this high, reason why I say technically it's broken, it's not, it lost the 61.8 from the low of, $8.09 to 45 bucks. Now, as soon as it lost that range, that's when the bells are ringing. As you can see. Last time, you see, like, it held pretty good. Last time it dropped just like this, it went up pretty fast, and it even broke the 50, but again got a support here, then went up. So this time, I'd say that the only way that the stock that I'm going to be bullish and I'd be happy, I'm still going to hold it, but it needs to go and maintain the price above 22.63. Now that's going to be my goal for next week, or for this week's closing. Okay. So if it doesn't do that, it's going to be a lot of buying for me, lots of averaging. Okay. My average isn't that bad, actually. It's just 24.24. So it's, $3, approximately 2.5 bucks. It's fine. I just don't see a reason for me averaging down for $3 yet. But when the time comes, I'd say that if it drops to 16 or 18, that's where I'm going, like, double downing and, heavily averaging down. But for now, I don't see a reason, because it could hold 22.63. Reason why it's critical is, as I said, the low to high, very simple retracement, and it broke the 61.8, so it's kind of dangerous at this point. Next up is Tesla. So let's go ahead and take a look at Tesla and what's going on with Tesla. Well, Tesla's story is very simple. This channel that I drew, it couldn't break above it. It couldn't get and stay inside the cloud, and it's just going down. Now, natural support for Tesla would be 595, and a resistance is going to be around, well, the first resistance is 720, which I've indicated, which is basically this cloud line right here, here, and here. Then the second resistance is going to be this channel around 350s, or 750s, I'm sorry. I don't know what the heck is Elon doing with all this, crypto, Bitcoin crap. I don't want to call it a crap, but it's just like, whatever, like, he should be focusing on what Tesla should do next. Volkswagen, Toyota, they're, coming out with electric cars in the American market. A lot of competition he's going to have with Audi, Qtron, and whatever, e-tron, whatever they're calling it. So he should, if he thinks he's well ahead of all his competitors, that's fine, but I don't think that's necessarily it. They will have, in some point, a competition. So we'll see what goes on with Tesla eventually. my long-term target is going to be 785 to 844. If it can get rid of it again, we're seeing this inverse head and shoulder, but again, the shoulder doesn't look right, and it could just drop down to 593 and get a support from there. We'll see how that happens, but or when that happens. But again, any of the charts that we reviewed today, they just don't look bullish. Besides, the ETFs aren't broken. But can you imagine if ETFs are broken, how bad the actual stocks are going to be? I can't imagine. We'll probably go all like blow up an account or something, you know? Now, next up is NIO, and honestly, I was wrong about NIO because this W and the flag and you know, I guess the $66 area correctly, and then it was going for again a next move up, and all of a sudden the market just sold off. And you know what sells harder than the others is when a stock goes from 22 to 66, 67, or $2.22. I'm sorry. It has a lower too. It was like $1.30 or so, $1.17. So from $1.17 it goes up to 67. Guess what? It's gonna sell off, and that's what exactly happened. I see a support maybe near 34 again, but then your target should be around 51, maybe 54 if it goes by. If it goes by the channel, it'll be about 50. But if it goes by the fib, which fib I actually have to change because it's not really accurate anymore. Then I have to change my charting. Basically, what it did is, let's delete this. What NIO did with the last move is that it hit the 50% extension, and then it just went down. How far can it go down? Naturally, what I do is I take this low and I take the high, and I think we're here, the bottom. And if we break down that's really dangerous, and it could go down to 23, which I don't think. It needs to hold and try the 50% extension again to the upside. So we'll see how that works. Again, I'm not all in for anything because the market, again, looks confusing. Most of your gurus will just be quiet in this time and just say, oh, I'm all cash, because they're never wrong, right? They're never wrong. They're always, predicting the market. They're not telling you their losses. They got their underwears ripped off. They just don't tell you that. All they tell you is that, yeah, I timed the market. I cashed out. Bull crap. Bull crap. Again, this flag is broken down, and today was a huge sell-off. I don't know if it had any news, but 10% seems like huge. The volume seems a little, a lot higher than the previous bars. So I don't know what the heck this was about. It is, all the internals are not looking good at all. I wouldn't be surprised if it goes down to 34. It is, it's heartbreaking that every time every stock that I, go ahead and chart, the charts don't look good. I mean, what can I say? The charts don't look good. I'm not gonna lie about it. I'm not gonna go ahead and, pump up BS for people. It just doesn't look good. Okay, that's what I gotta say. Now it's your choice to get out, wait, or whatever I've just said like a couple minutes ago. Just take down your leverage and then try to average down. But I mean, you're trying to average down NIO. This went from $1.17 to 66. What is the average like price that you're gonna try to work with? That's the thing. Next up is Uber, and I was kind of bullish on Uber because it's like if Uber is one of those recovery stocks, then I think its business is going to go up. But in order for Uber to be successful, restaurants needs to open, clubs and bars, and air travel has to go up. And if in order for all these to go up, then Uber will go up. Because if people are starting to go to bars, if people are flying and so forth, then Uber is going to have better business. Not that they're making money off of Uber Eats, but it's just that I think that they'll have more business when the economy opens up. So just looking at it, that's fundamental, right? Looking at it technically, this should hold because it's like it broke down under the 100-day moving average, which is like ringing bells. But it could be, if you're a contrarian, It could be a nice play, which it was right down here when it hit the 100-day. And we don't usually see that happening a lot because every time it does hit, it bounces off, hit, bounces off, hit, bounces off. So if you were to play this, counter play, I'd say that, Uber has a pretty good chance of bouncing, but it does the resistance is going to be around 55. So you only get $3 off of it, and the moving day averages and all the internals aren't looking that bullish. So all in all, none of the charts are convincing. And why I picked these names is because I like these names, and I think they're good quality names over. I mean, like FUBO, you might think it's not a good quality name, it might be a growth name, but other than FUBO being a growth and like spec play, all the names that I've went over today are pretty good companies overall. They have nice stories, but it's just like I don't see an excitement in the charts. Even though they did play technically perfect and it hit where it's supposed to hit and now it's hitting where it's supposed to hit, I just I don't see the risk in getting in such a market. That's all I gotta say. And let's take a look at AMD. Honestly, I haven't I've looked at AMD's chart for a long time after a long time the other day, and I posted it on Twitter. See, this rounding top doesn't look good. It broke down this megaphone. I think it's gonna retest 74. If it does break 74, that's gonna, you see this gap right here, it's gonna probably fill it around $69, $70. It's just that nothing looks good. You can say, okay, you can break this megaphone down here and down like this maybe, or maybe down like here, doesn't matter. But either way, that's gonna get you to $70. I don't understand. Like AMD is a good stock. I don't The valuation isn't that bad. It's just that generally there's a market sell-off. It's a capitulation, and everything is getting sold off for a purpose. It's not the individual name. There's nothing wrong with AMD. There's something wrong with Intel. Nothing wrong with AMD. Intel, they got the Apple chips going on, and then what if, Microsoft, Surface, and all the other people are like, okay, why don't we just try our own chip? Because Apple is so successful. I mean, Apple has been successful with everything that they're doing, but Microsoft does have the engineering power to do something like that. AMD is already a competition to Intel. Intel's graphic cards aren't selling as much as NVIDIA or AMD. So all these things are going for Intel, and Intel is not going down because it's a safe haven for a lot of people. So it's like looking at the business fundamental, future growth is not the story anymore. That's all I could say. And you just have to sit and wait through this pain. It just saddens me that AMD is getting hit. I mean, if you were to invest a couple months ago, maybe down even in August, we're at August levels. I think it's a cheap buy at this point. It's just that um, nobody's buying. That's the issue. Institutions aren't buying. It's not us because stimulus is there, right? It has nothing to do with us. And a lot of people have said that, okay, people are raising the market, people are, with the stimulus money. It's BS. So what I'll tell you is that institutions are selling. That's the thing. On my last video, I covered BlackBerry and I said that, the chart looked great. And it went up, but then again, it got up again. No matter what the technicals were, and the technicals were good, and I gave you every single point, it just didn't follow technicals. It just didn't follow, the rounding bottom that I told you, and it broke above, and then it went up huge, but again, just coming down slowly, melting down. You got the 100-day moving average sitting at 918. We'll see what happens. In worst in case, it's going to go all the way down to 739. This is what I mean right now, right? The technicals don't matter at this point. It's the fundamental. It's not even the fundamentals. What I could say is the institutions are deciding what to do. Fed is pumping the money. The Fed is giving the insurance. The rates aren't going to be hiked up. Don't give me that bond yield bullcrap. I mean, what are you going to put your money into a 2% interest? The market at worst could get you 5 on any, like, I mean, the market at worst could give you negative. Bonds are a guarantee. That's one thing. But it's like, I just don't understand the story of the sell-off other than political stance, and other than the fact that we went up nuts from Corona drop, and we've just filled the anniversary of the recovery. And now that we did that, are we gonna do another anniversary now going down? I just don't know. And this is what I'm thinking, is that a lot of people made a lot of money without knowing what the stock market is, and the institutions lost a lot of money on that because they were betting the market was going to go down. You got Gunlock, talking about the bond guy. He shorted the market at 260, SPY 260. Yeah, he got they gave it to him. So, maybe all those institutions, some of those institutions, I'm not talking about ARK and Kathy, some of the other ones, but maybe they're still short and they're just trying to cover up their pants like the GME story. So I'm just trying to read what's going on in the general terms, not the charts. That's why I haven't like shared a lot of charts lately, because it's like it's not playing the technicals, it's not playing the fundamentals. Um, I'm just trying to understand what's going on behind the scenes, which I don't have power to fully go over and understand, but just from experience, just trying to read off and see what could possibly go on. But as far as, my last, BlackBerry right here, what I would wait for is the 100-day moving average, which is 918. Other than that, as you can see, a lot of my conclusion was about the same with all the charts, that market has not been broken down as for the ETFs. Now, if ETFs broke down, that's going to be a hell. That's going to be like a coronavirus crash. They're holding down the ETFs, and the stocks, the individual stocks, are still crashing. So in this environment, there's nothing else to do other than go full cash, or just go full, take the risk and, put in your money and wait. That's all in your budget. Peloton 10% down, NIO 10% down. Look at, these huge drops are happening everywhere. All these, Cloudflare. Under Armour has been pretty stable, honestly, which, I thought was hilarious. But, um, all your cruises went down the hill today. They were up. Oh, there's nothing here that's green other than, Johnson and Johnson, AMG, pretty much, solid stocks here, but they're not going to move up or down. The energies are going up. IBM, Home Depot, not surprising, but the rest, you got your big players here. Apple, Microsoft, Google, Facebook, Boeing. Boeing is not as bad. Google is not as bad, but like, you know, there's something going on, and I need to just basically study for a couple more weeks. And that's why I've been like, you know, even if you guys know me, even if I have like the busiest day, I try to do daily videos. It's just that there's no point of doing daily technical videos at this point because there is no technicals. It's like, VIX at this point is not even moving up as much as it should because of the daily, chops. Yeah, at one point, SPY was up all day, and I was crushed down by Palantir and FUBO and all my other growth stocks. Um, Even Disney got chopped today. So it's like there's nothing else to discuss other than if I see something different, then I can make a video of it. But I thought that it's a long time that I haven't done a video, and just to warn you guys, either start going some cash or grow with cash. Get out of margin if you have margin, and don't worry about your loss at this point, and just stick long. And that long could be 1 year, 3 years. We don't know. We don't know if we're gonna live through another. And I'll show you this. Like if you go to SPY, and if you do, and this is monthly candles by the way now. So if you look at the years of what I said, like 2001 to 2004. Actually, I thought it was 2003. Look at this. Let me zoom. I'll zoom in. Look at this. 2001, every month down. Okay, well, a couple of months up, but 2002, 1 year, no difference. 2003, no difference. 2004 to 2005, no difference. You're still at the highs of 2001. 2006, yeah, now you're starting to pick up. So that's 5 years. 5 freaking years, and you're just, sitting and waiting. Nothing is happening. And then all of a sudden if we look at it 7 years later, you're just, lost freaking half of your money at the 2008 crash. Now you're seeing that from 2001 to 2008, that's 7 years, you're 50% down. That's the ETF. I can't imagine what you were holding, whatever you were holding, you're probably destroyed by then. And then it took that crash, it took from 2008, beginning of 2008, all the way up to April of 2013. That's another 8 to 13 would be another, um, 5 years. So from 2000, I'll tell you this, and it's hilarious. From 2001, we were at 119. 2012, or let's say 2011, you're around, 120. So give or take about 8 years in the market, nothing basically happened. And then you get that from 2002 full blown out, and people were afraid of these drops, and they're all scared. And this scared the heck out of us. And look at the monthly, how it hit the 100 moving day, and it just went up nuts. And now, we're at a level where can the market drop down to 292, where all the critical drops got supported, maybe to 300? It could, and that could destroy us, because we're seeing that even at SPY going down 0.5%, I'm down 6%. Down 6%. So that's all your decision right there. And I just wanted to show you that how the market usually behaves in 8 years, you're like nothing. So don't expect the market to move like that, like this year, as it happened like that the whole entire time. But this isn't too bearish if we break out of this channel. And don't get sucked into those YouTubers where the clowns, I'd call them, where they had, pumped up and thinking that they were, guiding people, fools with millions of followers, that they're, acted like they're experts. No. Where were they in the 2001 and 2010? The whole freaking 8, 9 years, the market didn't move anything. So again, be very cautious. Don't treat the market like casino. Treat it like an investment where you might have to just keep on investing for years. Treat it like it's your 401k. If you're a day trader, I've not seen a successful day trader. Now you guys are gonna, bombard me and say, oh, bull crap. I know this guy, I know that guy. No, tell me a guy that has been a day trader for 10 years and they're overall positive. Give me a swing trader. When I mean swing trader, weekly swings, within the last, 10, 15 years, their overall record is positive. You won't see any. Okay. So that's my conclusion. I'm again for the next video, I'm probably gonna wait for a market like reaction or anything. Even if the market goes up, I might not make a video because I might not think that it's significant. But anything significant that I think either on the upside or downside, I'm gonna make a new video. Till then, I'll see you guys. Don't forget to subscribe, give us a like, and we'll see you in the next video.